During the second video in our Beginner's Guide to the Stock Market series, we use the TradingView stock screener to shortlist some value stocks based on our investment criteria. In this video, we will complete a review of one of the companies that met our shortlist criteria, Intel. Intel's share price is down by more than 30% from its 2019 high. In this video, we'll assess whether Intel is currently a good stock to buy. So join us as we review Intel on today's Investment Store. Welcome to the Investment Store, the personal finance channel that reviews a diverse range of investment asset classes, from stocks and ETFs through to real estate and cryptocurrencies. If you enjoyed this video, please click the like button and leave a comment. And if you like our content, then please subscribe to the channel to become part of the Investment Store community and hit the notification bell to ensure that you never miss an episode. With that said, let's commence with today's video. Intel is one of the world's leading technology companies. It designs and manufactures microprocessors for the global personal computer and data center markets. Intel pioneered the x86 architecture for microprocessors, and it is the leading company in this space. In recent years, the firm has been expanding into new markets such as the Internet of Things or IoT, artificial intelligence, and robotics. Intel's Q3 numbers continue to show strength in cloud computing and notebook PC demand, while enterprise and government data center sales have fallen significantly and contracted their margins. Intel continually strives to provide the most powerful and energy-efficient silicon solutions to any product that is smart and connected. Most data centers are powered by Intel technology. Intel's current CEO, Bob Swan, is from a finance background. Some critics have questioned his appointment, as it's feared that Intel's competitors, who are led by more technically minded CEOs, will make more innovative strides over the coming years and gain crucial market share at the expense of Intel. We will now complete a stock analysis of Intel by following the Investment Store 4-step approach, which includes first looking at the economic moat, then the fundamentals, doing a comparison analysis, and an intrinsic value of the stock. And once we've completed these 4 steps, we'll generate our Investment Store score. So let's start with the analysis. Looking first at Intel's economic moat and considering the intangible aspect of this business, Intel is the world's leading producer of advanced microprocessors, and its design and process technologies cannot be easily replicated. Intel also enjoys an estimated 85% of the market share in the computer process market. This gives them a firm advantage over their competitors, and therefore we score them an 8 out of 10 for intangible. When we consider switching costs or how easily a company can switch services, AMD continues to encroach on Intel's PC and server CPU dominance. The rise of artificial intelligence has also unleashed new competition in the form of Nvidia. Having said that, Intel still controls a large share of the market, and for this reason we scored them an 8 out of 10 for switching costs. Moving on to cost leader, Intel has superior cost advantages realized through its design and manufacturing of its cutting-edge microprocessors. Intel is able to successfully decrease their cost per transistor with each successive technology node. Intel are known for their tick-tock strategy, which involves developing a new technology node every 2 years to reduce its size, known as the tick, whilst launching new architecture for its microprocessors during the years in between, which is the tock. And for this reason, we scored them an 8 out of 10 for cost leader. Looking next at network effect. In an effort to stave off competition, Intel acquired Altera for $16.7 billion in 2015. This was done as a strategic move to address the new AI-related chip demand. Intel has also made other acquisitions to increase market share and breadth in areas such as data centers and beyond the general CPU market, so we scored them an 8 out of 10 for network effect. Finally, when we consider scalability, mobile devices have become the preferred device to perform computing tasks and access data via cloud infrastructure. As cloud computing continues to garner significant investment, Intel's data center segment and server process business stands to be an indirect beneficiary of this. Intel's acquisitions also help with this growth trajectory, so for this reason we scored them an 8 out of 10 for scalability. This gives Intel an overall economic moat score of 8 out of 10. Next, we'll look at the fundamental analysis of this stock by considering Intel's key financial data. Intel's operating margin has been consistently greater than 25% for the past 5 years and has only been under 25% once in the last 10 years. This is strong, so we have given them a 9 out of 10 for operating margin. When we look at Intel's net margin, this has also been over 20% for 7 out of the past 10 years. This margin has seen some downward pressure during the quarterly reporting for 2020, so we scored this an 8 out of 10. Intel's return on asset has been over our target of 10% for 3 out of the past 5 years, so we scored them an 8 out of 10 for ROA. And Intel's return on capital employed has been above our 15% target twice over the past 5 years, so we scored them a 7 out of 10 for ROCE. Intel's debt to equity has not been over 1 in over 10 years, which is very good, so we scored them a perfect 10 out of 10 here. Then moving on to the price to earnings growth, Intel's PEG has been negative for 4 out of the past 5 years. And this tells us that Intel's earnings are not growing, which is a concern. Later we'll see how this compares with its main competitors, but for now we'll score Intel a score of 3 out of 10 for PEG ratio. Intel's free cash flow yield has been consistently over 5% for the past 10 years. This suggests that the company is reasonably priced and may be undervalued, so we scored them an 8 out of 10 for free cash flow yield. And finally, when we consider Intel's annual growth rate, we can see that this is similar to its PEG ratio and has been negative for a number of years over the past 5 years. So we score this a 4 out of 10. Taking all of this into consideration, we have given Intel an overall fundamental analysis score of 7 out of 10. We'll next move on to compare Intel with 2 of the leading companies in the microprocessor space, NVIDIA and AMD, and also compare them with the SPDR Technology Select ETF, which is one of the leading technology ETFs. This helps us to assess whether our money is better invested in the stock or in an ETF. Looking first at the net margin, Intel currently has a stronger net margin than AMD, but is slightly less than NVIDIA, so we scored them an 8 out of 10 for net margin. Intel's price to earnings ratio is the lowest in the microprocessor sector, and is actually one of the lowest in the tech sector in general, so we scored them a 9 out of 10 for price to earnings ratio. And Intel's PEG ratio is currently 0.8. which is in value territory, as a PEG less than 0 is very good, so long as it's a positive number and not negative. In contrast, AMD have a reasonable PEG, but this is inferior to Intel, so we score Intel a 9 out of 10 for PEG ratio. Intel's dividend is 2.5%, which is decent and greater than its competitors, so we score this a 8 out of 10. Moving on to the current ratio, Intel has the lowest current ratio when compared to its peers, so we score this a 3 out of 10. Looking at the free cash flow yield, Intel has the highest free cash flow yield by a margin, so we scored them a 9 out of 10 for this. And then looking at Intel's return on capital employed, Intel's ROCE is within the same region of its competitors, but it's the lowest ROCE of the 3, so we score them a 6 out of 10 here. And for price to book, Intel's PB is the lowest when compared to its competitors and also lower than the ETF, so we score them an 8 out of 10 for price to book ratio. From a debt to equity perspective, Intel has a good DE less than 1, but its competitors have even lower price to equity ratio, so we score them a 5 out of 10 for PE ratio. And then finally, when we consider the 12-month price difference, we notice that Intel's share price has reduced by 33% from its 2019 high. In contrast, NVIDIA and AMD both have experienced over 100% growth in share price this year. And the XLK ETF at 42% growth or 43% growth is also very good. But this shows that Intel has plenty of upside potential, so we scored them an 8 out of 10 here. With all these numbers in consideration, we give Intel a comparison score of 7 out of 10. The final step in our analysis is to determine the intrinsic value of Intel. At the investment store, we use a discounted cash flow method and Gordon growth model to estimate the value of an investment based on a company's future cash flows. Using an annual growth rate of 5%, we calculate an intrinsic share price value for Intel of just over $40 per share. Intel's 10-year average growth rate is actually only 3%, and so if we use this number, we calculate an intrinsic value of $34 per share. Now, at the time of preparing this video, Intel's share price stands at $47 per share, which is higher than both of these previous values. For Intel to have an intrinsic value that reflects its current share price, it would need to have a growth rate of approximately 7%. Now, this is achievable considering that they have had double-digit growth in previous years. But when we take this into consideration, we score Intel an intrinsic value score of 5 out of 10. So in summary, we have recorded the following scores for Intel, giving them an ISS of 7 out of 10. Now, if we were to purchase this stock, we would consider applying a 10 to 15% margin of safety to the current share price, which means we would buy it in the $42 to $44 per share range. And in actual fact, we recently purchased some Intel stock at $44 per share, as we saw that it was in value territory. Now, if we were to purchase more of this stock, we would pay close attention to Intel's Q4 earnings to ensure that they're not losing ground or market share to their competitors and that there is some growth there. We would also pay close attention to their forthcoming technology releases and watch the sales figures associated with this. If Intel are able to achieve more growth in earnings and improve their sales, then this could turn out to be a successful value play. Thanks for watching. If you enjoyed this video, please leave a like and let us know what you think of our findings. If you'd like to learn more about how we analyze assets, then please subscribe to the channel and also check out our website. We look forward to seeing you on the next video.